Welcome back to the ABCs of ERP and Beyond, a podcast all about enterprise resource planning and how it can help your businesses run smarter, not harder. In our last episode, we tackled the dreaded Trump tariffs and showed you how to manage them in Acumatica, all about landed costs and how we can properly analyze the spend on the part and then the additional tariffs that particular part incurs when it's imported. So today we are continuing that conversation with a look at how Microsoft Dynamics 365 Business Central handles tariffs and landed costs. So if you're importing or navigating compliance or just trying to keep your cost calculations accurate, then this is the episode for you. We'll be digging into how Business Central can help you stay ahead, even when the global trade situation throws you a curveball. And as ever, I am joined with my fellow co-host who will take us through this in Business Central, Nirav Shah. Welcome back.
Hey, Peter. Yeah, happy to be back, and this time kind of talk about Business Central. We weren't thinking about doing this episode, but after we did Acumatica and how Acumatica customers could handle the Trump tariffs inside Acumatica, I'm like, hey, well, there's a ton of other ERP users out there, and Business Central is one that came to mind and said, hey, let's just go ahead and do a demo on how Business Central handles the Trump tariffs inside the system. So this is a good one. This may be actually pretty quick because Business Central uses standard functionality, and it's all about setup, right? At the end of the day, with any of these systems, is being creative enough to find a way to capture data, in this case, in the economic environment that we have right now with this additional tariff, but to capture it in a unique way that you could extract the data from your ERP and then analyze it, right? Like, these next 3-4 years, what, based on our trends and forecasts and this tariffs, right? What should we expect on our margin for a specific item? Should we be talking to customers? They were increasing our price. Is there another way around this? But the only way to do that, first, you have to be looking at that economic situation and say, how do I handle that in the ERP? You want to make a conscious effort of saying, let's somehow update our process so we could capture that piece of data, right? And then what are you going to do with the data? So that's the benefit of these ERP systems, is it gives you the capability to continuously adjust or adapt on what's happening in your local, right, government, federal government, or whatever's happening, so you get the most accurate information for your financials at the end of the day. So Business Central does a good job, and what we're going to show today is how we would create a new what's called item charges record. Essentially, item charges is where we're taking a charge or a classification of a specific charge, booking that into our payables, but instead of expensing that charge, how do we take that charge and then assign it back to a historical receipt, i.e., in this environment, it is a receipt that has incurred not only the standard tariff, but also a Trump tariff, additional charges. So how do we capture that correctly on a invoice that we receive from the U.S. Custom and Border Protection, right? That they release the goods, or a freight forwarder that passes that specific charge back on to you. If you have, what we talked about in our last episode is a company that kind of handles it all end to end for you guys, right? So we'll look at it very simply today, where we show these different charges, how they could be added, first set up, then added to your invoice. And then we'll go and look at some of the records that we updated from this example to see, how clear can we see the difference in tariffs when we associate it to receipt lines, and what does that do to our unit cost for the item? So you get that clear visibility throughout the system, and not having to kind of scratch your head and be like, well, yeah, we got charged $2,000 in tariffs for this receipt, but I can't really tell how much of it was it because of actual the standard tariff versus the new imposed tariff with the new administration here, without having to look up the invoice manually, right? And
Yeah.
keep that handy to figure out what's going on. So
Yeah, this is really important for two areas. I think it's the compliance side, the regulatory compliance. So the finance people will care about that, and then just be able to make good business decisions. There's no way of getting around it. I think we said the last time, there's no way of winning this game. It's the way you win the game is by losing the least. And I think some of that can be at least minimized. The impact can be minimized somewhat with some good business decisions. If you can clearly see, right, there's this particular component part that we're buying from a particular country, maybe there's an alternative that sourcing can source that minimizes the impact of these new tariffs. So being able to make good business decisions will only come from correctly capturing the data and being able to then compile that information into sound options that you can maybe take forwards.
yeah, exactly.
And that's the name of the game. Like as you said, you're flying blind if you're not able to show specifically the landed cost of every part. And we're not just talking about finished goods here. We're talking about component parts and raw materials as well. If you can't easily be able to see that, you're flying blind, and you could be, not as profitable. One, you're not going to be as profitable as you probably think. And your salespeople are probably not thinking. So, yes, you might be missing opportunities where you can reduce your impact by passing on those costs to the end customer, but also sourcing and supply chain opportunities to minimize this. So there's a few people that have got stake in this, but it's all about capturing that at the first point when you're receipting it in.
Yeah. And whether or not you could actually even increase your prices, right? That's based on your business, based on your customers, but at least you have some insight to plan. What's going to happen? Do you need more cash flow here in the next, year or two based on these tariffs, right? Or do you start sourcing locally for you guys, right? So it kind of helps if you could categorize the data correctly and put it into the correct, format that you could extract it. I think it's a huge game changer for businesses, especially, when there's a drastic change in the business environment that you're operating in. So, with that being said, I think Peter, we just jump into it. What do you think?
Yep.
Jump right into Business Central and show it. I think everybody could see it on our screen here. So we have an example already kind of defined and set up for us. I'm going to first take us to a particular receipt record that we've completed inside Business Central. So I'm going to navigate to Item Ledger Entry. It's called Item Ledger Entries here. And these are one of the main arteries inside Business Central. All the financial activity and subledgers get kind of populated through this point. So we're going to look at this particular record up front, a purchase receipt that happened back in February for item CM11200. We ordered 100 at $25,000 total. And if we look at the unit cost breakdown, it looks like the unit cost was $250 per piece. Okay, and that's just the raw invoice price from our vendor at the moment. What we're going to do now is assume we've received an invoice from the U.S. Customs and Border Protection Agency, and in that invoice, let's say we have a regular tariff of let's say 10% of that. So let's say it's going to be, I don't know, let's just put some whole numbers here, $100 of our regular tariff. And then let's say for our Trump tariff, it's at $200. Okay. And we'll go ahead and add that. But what we want to do, and to show the how powerful this feature functionality could be inside ERP systems, specifically inside Business Central, is how you could record the cost, amortize that value, that tariff charge in total across the receipt quantity that's come in, one receipt or many receipts, and the system will allocate the appropriate dollars back up to the balance sheet and inventory with those charges. And then also you could clearly see the breakout of those charges when you look at a history of unit cost, saying, well, how come this item instead of 250 is costing me 350 now, right? Why is my unit cost 350? And I could take a deeper look into that, drill into that data and see that it's 350 because 250 is my vendor cost, and then I had, so and so as my regular tariff, and then I had a Trump tariff, right? And then now with that data, you can make some better decisions. So that's the whole idea here, folks, is to show you how, looking at a more, integrated system like Business Central gives you the chance to see it, because if you can't see it, you have no chance of even, trying to predict profitability for your business. It becomes much harder, becomes way more manual than you'd like it to be. So this is the item that we want to work with. This is the specific receipt layer we're going to be looking at here. It's receipt number 220022 in our example. Now, how does this all start, right? Obviously, we need a PO, we need to receive it in, we need an item. So that all has happened in my example. But the main setup at the end of the day is what we call item charges inside Business Central. So I'm going to go to item charges. And within item charges, these are all basically non-stock charges that you want to essentially maybe expense or allocate back into the balance sheet, right? Back up to the cost of your inventory, capitalize it, in other words. So once this charge comes into your balance sheet and you start selling this inventory, you're basically matching the expense to the revenue, right? Because this is all direct costs related to the product, sourcing the product, getting the product to your door, stocking it, and getting it to the customer. So you may want to, look at item charges, put these various different charges in the item charge table, set this up. And what we're going to look at here is, I'm just going to search tariff. So we have two tariff charges here. One, we have a regular tariff, and the other one, we have a Trump tariff. Okay, I put this Trump tariff specifically on here because the economic environment has changed, right? We're no longer do we want to track just regular tariffs, but we also want to track the Trump tariff as we're incurring these additional charges in the cost of doing business and purchasing and procuring our products. So we want to put this, capitalize this charge back onto the balance sheet with inventory, but have a clear distinction of these additional charges in our history and in our ERP system.
Yep.
Okay.
Yep. This is good because this means that, they might be still hitting the same GL accounts, but it means we can slice and dice on the data. We can pull those apart. So it's not like, now we need to set up separate GL accounts as well for this Trump tariff. It's just not the case. You can map them to the same ones, but this now means that you can kind of pivot on these different types of tariff because, well, hopefully, touch wood, this is only a temporary thing and we can get back to normal global economy at some point. But we want to be able to split these out for this reason.
Yeah, absolutely, 100%. So how does this all work? How does this process work? Have you done our setup? Setup was very easy, right? Now I want to see this in action. I want to see our tariffs working. I want to see us capitalizing this charge back onto the balance sheet. So what we do is go into our purchase invoice. Let's say we received the invoice now from U.S. Border Customs and Border Protection. I'm going to select my vendor. Here's our vendor, U.S. Customs and Border Control. System will go ahead and put all the other information in here. We're going to say we got our invoice. Let's say our invoice is so-and-so number. Okay, put our vendor invoice number here. Now, the real key part and where it gets different from your standard AP invoice processing inside Business Central is here at the lines level. Instead of type, you would actually select item charge or charge item in this case. Okay, and the first line we're going to select is going to be our regular tariff because that'll be the first line on our invoice. Quantity of 1. We don't have to put the total quantity because remember this tariff, this invoice could be across one or many receipts. Okay, and we'll say that this is let's say they're charging us $100. Okay, tariff for that 250 for that charge. So actually, let's up the value here. Let's say it's $1,000. Okay, for our regular tariff, we're going to assign this, and there's these two fields here, very, very important. These two fields, the quantity to assign and quantity assigned. We want to go into quantity to assign, and what this will do, give us the opportunities to find our receipts that we want to associate this particular tariff line to. Okay, we're going to select get receipt lines in this table. And what I'll do, okay, and I just want to quickly show something here. I could select multiple receipts. These are all receipts in the system. And if I know what receipt numbers I want to allocate those tariff charges to, I could select them here, right? I won't select it, but you can select multiple lines here. I won't select all these, but I'm just going to search. Oops, let me delete this out of here. What I want to search for is my specific receipt number. So I'm just going to hit the search icon and put in my receipt. Here's my receipt that we're looking for, my receipt number 220022 for 100 pieces of my item CM11200. I want to allocate the charge to that receipt. Okay, the quantity assigned will be 1, because remember, back on the purchase invoice line, we put quantity of 1 to make it easy. Okay, so we don't have to worry about assigning it by specific percentage of quantities that we received in, so on and so forth. I do want to mention that we have the suggest item charge option up here. What essentially does it, depending on the type of items that you're using, you could assign your item charges to based on volume of receipts, based on amortized equal quantity, equal weight, equal number of pieces, so on and so forth. So you could do that very easily by using the suggest item charge assignments. So I'm going to go ahead and assign quantity 1, which is a full $1,000 to this receipt. I'm going to hit close, and what we'll see here is the system assigned a quantity of 1 because we put a quantity here of $1,000. It's going to do it across those 100 pieces. Now, here's where it gets interesting. In this scenario where there's a change in economic environment, and we have this additional charge, which is this Trump tariff that we want to keep close track of through our ERP system and not bundle it all up into our original tariff charge because we lose the visibility of how much extra we're paying, is we created a new item charge called Trump tariff. So I'm going to select that new item charge called Trump tariff just to distinguish and separate out this new charge that I have. Right? And I'm going to do that. And let's say this is $2,500. Okay. My Trump charge. I'm going to come back into quantity to assign. I'm going to go find that receipt again. I'm going to find that receipt. Same receipt number. I'm going to hit OK. I'm going to suggest item charges. So I'm going to allocate the full $2,500 now, in addition to the $1,000 that we just did for the regular tariff, back to this receipt. I'll hit close here. Now I've assigned 2 tariff lines, right? So I broke out this U.S. Customs and Border Control invoice into 2 different tariff lines associated to the same receipt number or numbers if you're doing it to multiple receipts, right? And respectively put the correct charges here. I'm going to go hit post. Once I post, what the system is doing, Business Central here, is taking those charges, but instead of expensing those charges, these tariffs to the P&L, it actually knows that because we selected receipts, that these charges need to go back up to the balance sheet and associated to the unit cost of the original receipt.
Nice.
Okay, now let's go look at that, Peter, and I'll show you kind of how this operates. I'm going to go back into my item ledger entry where we started from. Item ledger entries. And I'm going to see our receipt number, 220022. Okay. Now, if I scroll over, you notice my cost amount now has changed, right? It was $25,000, but now it's $28,500 for the full 100 pieces. Why is that? Well, I'm going to drill into here. When I select this hyperlink under the cost amount actual, this is going to take me into what we call our value entry table. Now, the value entry table gives me an additional breakout of what the total cost of that layer is. We know that layer that we saw in the item ledger entry is $28,500. So if we look at reconciling that, we see the 28,500. The first layer is the 25,000 that we received in on February 28th, right? That's vendor price. And then we have our regular tariff of $1,000. And then we have our Trump tariff of $2,500. So what these tariffs did was added additional cost to my inventory on my books. So this item now added additional $10 per piece for my regular tariff and $25 a piece for the Trump tariff. So really this layer now is $85 per piece for the 100. And I could quickly see that information. So if I go to my item, go into my item here, give it a quick minute. And if I go into my unit cost, I want to see how this is presented. If I come down here on the bottom, my layer as of 2/15 now is $285. You notice the system put those item charges for my Trump tariffs back up to the balance sheet, back up to my unit cost. So now my unit cost, when I'm selling this layer, right? The system will recognize that this layer is $285. Now it depends on your costing method. If your average cost, if your FIFO cost, right? Obviously that's going to impact what your cost of sale will be for this particular item at the time you are shipping and invoicing, right? But at least this layer now is tied to the item correctly, and you're getting the full product cost for all the costs associated to landing this back to your inventory at the end of the day. A lot of benefits here. Business Central handles it very, very well. Easy in the case of using item charges. The key here is if you're a Business Central user, you want to create a new item charge record for Trump tariffs and create procedures for every new invoice that comes in from your freight forwarder or U.S. Customs and Border Protection to separate that line out. Don't lump it together, right? So there's a little bit of a process change here. Don't lump it up all together. Separate that line out. Do your regular quantity to assign as you normally would, and then go ahead and post this back up to the balance sheet, back up to landed cost to your item.
Very nice. It seems like we have forgotten something. It seems almost too easy to get this set up. But it's nice. At least that means that because the tariffs are like as of now, it means that there's not like a whole host of changes and configurations to consider in your current ERP setup. It's pretty easy to just set up the necessary item charges and kind of slight tweak of your process on the purchase invoice. That kind of assigning to the purchase receipt is really powerful because it's doing all of that linking in the background and revaluing the cost of the good.
Yeah, here's one other thing I just thought of here. If I were just to go to my value entry table and you just want to kind of see how much you're spending on Trump tariffs, so instead of going through your invoices, okay, what you could do is just run this in analyze mode. Okay, your value entries table. And let's say I want to actually do this by entry type. I want to group by entry type here. Remove the group, ungroup here. So I'm going to do my group by. So I could look at by Trump tariffs, right? What my item charges are so far. So $3,300 I've been paying extra, right? Real quickly, I could see that in Business Central using my analyze mode and going into a pivot table and quickly understanding, at any given point, how much I'm dishing out because of the additional tariff that's been happening without me having to kind of, run reports, take this Excel or take all these, AP invoices and tally things up in Excel and essentially, reporting on this, right? This is real-time data right within your ERP system that you could use the tools and technology that are already embedded within, for example, Business Central here.
Yep. I think it's more than ever important to really understand the real cost of the goods. It's more than just what the invoice price is. And that's kind of the benefit of doing this. Making sure that you are allocating the charges, making sure that you're not underreporting item cost for
Yeah.
everything really, from regulatory compliance to salespeople to the rest of the business that need to know this, because everyone's going to get impacted in one way or another.
Mm-hmm. Mm-hmm. Yep.
I guess the other couple of things for the analysis point of view, if I was to put my data analyst hat on, would be things like take your time to at least get it set up right. Outside of a demo environment, maybe you've got other things that you need to consider, but at least make sure that you're doing normal things like consistent naming conventions for tariffs. Maybe you want more than two, and you want further split on regular tariff, maybe. But at least make sure that your naming convention is right. Try and leverage the dimensions. Like we saw the posting groups that are set up slightly differently on those two tariffs. Things like that really help, because they then can help on this, whether you're doing the analysis in a pivot table in VC or through a GI in Acumatica, or even piping this into Power BI for like landed cost dashboards. Just get that set up right, as easy as it is. Don't
Yep.
just throw anything in there. Like make sure it kind of fits with the rest of how you've named things and set things up in the system.
Yeah, absolutely. And ERP systems are not just for this current economic period, right? They're designed for, right, as things changes over time, right? Let's say 4 years from now, there's no more Trump tariff, right? And then you realize that maybe you weren't as profitable these 3 or 4 years, but let's say 2 years from now, or let's say 10 years from now, right? The tariffs are still high, but they're not because of Trump tariffs. You could always analyze the data, right? Within this ERP system, you could look at trends, not just for a year or two. You could look at trends for 5 years, 10 years, right?
Yeah.
And determine what's better pricing, what direction are you going in? Should you be buying, from offshore? Should you be looking onshore, right? What does all that look like at the end of the day? And if you keep data organized and people follow processes in your ERP system, right? The whole idea is to get good business decisions, move the business forward, reduce costs, increase quality, improve margins, right? Increase revenue at the end of the day.
Yep. Another impact that I thought about is doing year-on-year comparisons as well. You might want to factor out the Trump tariffs, because it's easy to go, oh yeah, well, the price is, the landed cost is significantly cheaper now because last year we were paying more on tariffs. Well, that's fine, but you're not really comparing apples with apples. So being able to split it out means you can also filter it out either before they happen or after they happen, because it's going to impact any kind of time intelligence calculations you're doing, which can muddy the waters when you're trying to do genuine year-on-year comparisons.
Oh yeah, absolutely.
And I also say that, tariffs do come and go and they change, but I think the point is landed cost tracking will always be relevant. It always has been, and it always will be, regardless of the tariffs. You may have other landed costs. You might get paid. You might have to pay a repacking fee, or breaking down a container, or redelivery charges, whatever it is that you also want to be able to include into your landed cost. So it's not just, just do this for the Trump tariffs right now. Landed cost tracking is always relevant, and being able to incorporate these new costs is really the thing that we're doing here. But if you're not even tracking your landed cost properly, you don't really stand a chance just adding in.
You don't have a chance. So. Yeah, right. Exactly. And like you said, I think Business Central makes it easy. Hopefully, people out there who are listening to this podcast are using this functionality called item charges. It makes landed costs very, very easy to manage. And it's just another way to stay on top of, how your business is performing, and getting everything set up correctly and adjusting when you need to adjust without having to look for new software, without having to, think whether your current system handled this or not. An ERP system like Business Central does this out of the box, and hopefully you get a chance to use this and find this very informative, that you could take into action right away, first thing Monday morning.
Yeah. When everyone's paying so much more.
Yeah, exactly. But did you hear they're talking about the iPhone's going to be $3,500
I
in December? That's
know.
crazy.
Yeah, it is. It is. But it's here. It's just how we deal with them now. So, I mean,
Yeah,
who knows? Maybe in a couple of weeks, it's just decided to, no, that was not what I want to do anymore, and just gets rid of it again.
right, right.
Seems to be quite easy to change course whenever he feels. So, who knows? It might be here for the next 3.5, 4 years. That might be over by next month.
Yeah, yeah,
But either way, people are getting charged right now. A lot of went live yesterday. Some more go live on April 9th. So
yeah.
it's coming.
It's coming.
What do you prefer, BC or Acumatica? Well, I would say actually both. For me, it's both. I think anything
Yeah.
finance related, both are very, very strong.
Hmm.
ERP is built upon the foundations of finance. So I would say everything
Yeah,
comes back to the finance people.
yeah.
So they have to be strong. I think every ERP is going to be, every proper ERP. I'm not going to mention some that aren't, but any proper, you know what I mean by proper ERP, are always going to be strong on this.
Yeah,
Which one do you
I
prefer
tend
then?
to agree. Yeah, I tend to agree with you. You know, I, I have a master's in accounting, so for me, as long as the accounting is right, right, it has to make sense. Debits and credits, and it has to follow GAAP principles. Both do it very, very well. Both are pretty easy. If I had to tip my hat one over another, I would maybe say,
I'm going to go. I'm going to guess.
okay.
I'm going to think you're going to say. I think you're going to go on BC.
You're right. I think BC just makes it just a very bit easier, just because uh, you could still use the same purchase invoice page that you use for other invoices, versus an Acumatica, you have to go to a landed cost page and put in your landed cost that way, and then create the bill off of that landed cost. So there's like an extra step there that I feel, you know, um, where Business Central just kind of eliminates that, and you just use the same page that you're used to using at the end of the day. That's me, but depending on the size of the business, right? This is not like
Yeah.
an answer that might work for everybody. I think for smaller businesses, possibly Business Central is really good because it cuts out extra stuff. For bigger businesses, and you have, like, let's say 15 people on your AP team, maybe you have one person dedicated to landed costs, and you want them to go ahead and essentially put in landed cost charges, and then there's somebody else that does the bill of those landed costs as reconciliation, and moves on, right? I think that's totally acceptable. I think that's fair and reasonable if you have a much bigger department. But it feels for me, I like to do things like within minutes, within seconds, from my standpoint. So if I could just have one screen and one page I have to work with, I'm for that.
There's a surprise. I'm supposed to be the professional lazy person. You can't take that. That's my thing.
That true. We agree on one thing here, Peter.
What, that we're both lazy, or I'm the
Yeah, we both.
professional lazy
I think we're
person?
both lazy. Yeah.
Right. Okay. Great. Good. Thank you very much. Another great demo. So it's always good to immediately flip, because I know we literally just recorded the Acumatica one and
Yeah.
thrown that out. So it's great to now jump straight onto the BC.
Yep.
Hopefully we can get this straight out as well. And
Hmm.
then people have got a like-for-like comparison. I don't think this
Yeah.
is going to make or break. This isn't an area to decide if you're not on either of these. I don't think
Right.
this is a particular area that you'll be able to glean, like, okay, that definitely means Acumaticas for me, or the BC.
Right. Right.
I think that
Right.
still belongs on the other department stuff, how it handles manufacturing, or whether you're more of a distributor, or what your business looks like. But it's just
Yeah.
nice to see that both can handle it pretty robustly, even though one will have a couple more steps. But it's just something else that's nice to be able to at least control. And then, as we said at the start, be able to see the impact of this, be able to make decisions based on what the data is telling you. So It's good. Both are strong. No surprise there.
Yeah.
So yeah. It's a good couple of episodes, couple of good demos. So nice. And if people want to reach out, if you've got any other questions on some of this stuff, maybe you're tracking other landed costs, or maybe you're incurring other landed costs and it's going into some kind of bucket and you're not really leveraging that data, let us know. Reach out with some comments or questions if there's anything else you want to see, or reach out directly. You can find me on LinkedIn. Nirav, where can people reach you?
Yeah, my email, nirav.shah@answers.erp, or LinkedIn or on YouTube. Throw a comment on there. Happy to respond. And any way you ingest, this information, we will be there to support you and help you through this ERP world. Actually, this ERP world out here to make sure you have the most informed decision to help run your business.
And as ever, we are the ABCs of ERP and beyond. We shoot and publish a new episode every 2 weeks, so you can find us everywhere, including YouTube. And again, this was a video demo, so if you're only listening to us, well, some of it probably doesn't make sense. So reach out to us on YouTube or any major podcast platform: Apple Podcasts, Spotify, Google, Podbean, YouTube. Pocket Casts. That's it. I'm up to 6. Like every single time I go through this, I try and add another one. And we're going to go shoot for 7 next time.
There you go. Nice.
I should just get a list from ChatGPT and read them out and be done with it. But there we go. But yeah, find us. Make sure you like, subscribe, and do those things. And Nirav, well, enjoy the next couple of weeks. Hopefully we have something. Well, I was going to say, hopefully we have something more exciting than tariffs, because it's not great to say. How can you track your increased costs? So maybe we should flip it up and do something more fun. But it's good. Enjoy the next couple of weeks then. Thank you once again, and I will catch you on the next episode.
All right.